Morning, it's Harvey Jackson. Just going to go through drought and have a look at some of the major things that are going on in the market today. So the drought monitor came out yesterday, and it's suggesting higher degrees of drought in a lot of areas. A lot more color on the screen for the colorblind guy. A little bit. I can see the darker colors for sure, but the yellow is probably not quite as significant at this time of year. But we also can see that there's an increase in drought by 5% on corn, and 7 points on soybeans, and spring wheat is 1 point. Um, where is that? You can see that there's some areas that are getting affected, and you can see here that this area here is probably the bigger one. That's where the bigger increases started to come in, and probably a little bit in that area as well. And if we look at what states make up the major growing regions, and you would say Ohio and Kansas, both 6 and 5 respectively, are with increasing drought. That is what's probably pushed those the drought monitor index to go higher in drought, and it does draw some concern depending on crop stage, smaller beans or something along those lines. Here's your temperature outlook. You're 6 to 10, you're above average, and then you're 8 to 14 above average as well. So, and not a whole lot of precipitation in the forecast for those areas. You can see where the moisture did hit in the last 30 days, and the last 30 days are quite important when we talk about soybeans. And if we remember the growing region for soybeans is kind of in that area there, and there has been some definite moisture to fill those top pots. Again, you can see how that kind of draws out. Temperature for Western Canadian and nationally, you can see that it's going to be a little bit hotter west for the 0 to 5, and then when we move ahead, it quickly moves across the province or the Canada and nationally into northern Ontario, and you can see that it basically dissipates to lower temperature anomalies, still above, but this definitely should be speeding up harvest. You can see that it would be speeding up harvest on the European model here for the 0 to 10 as well, and yeah, I don't know, or on the moisture as well. Here's your river levels. We are extremely low, and going back to levels that we had last year, where they had shipping problems. So, if it persists, it actually could impact basis, which eventually starts to impact futures values at some point in time too. And that's all I have there. So here we got canola down 5 to 6, so or rapeseed down 2 to 2.5, soybean oil down 0.22, and flip over to the wheats here, down, let's call it on average around 4 cents. Where is this destinations where the because all the talk is about China. China's in the yellow, and we've seen some pretty light years, but you can see that some of these EU took up a good portion of the mix when China wasn't in, and you can see what else is or United Emirates, but it's not a huge number, but I would imagine they'll get to those fatter levels when China is not in this market, and we've got a price differential as well to Europe. So here's your canola chart, just looking a little bit more broad. We're still in this downward channel. Canola is trading right at your 20-day moving average. Like to get above that, of course. And if we look into it a little bit deeper and just look at retracement, and we're basically just around the 23.6 on retracement for the way up. I'd love to see it get above this 38.2, which is 589 or 590-ish kind of value. But you can see that we've touched it and pulled back a couple of times in the last couple of trading sessions. So this is an intraday 5-minute chart. Here's your rapeseed, and it's trading right at and not wanting to get through the 50-day moving average, but it's in between the 23 and 38 percentile, where the canola was having issues to get remain about or at the 23.6. The differential is still pretty high, well above the 120. So Canadian canola is $123 cheaper in versus a European rapeseed priced in Canadian dollars. What does that mean? Well, I've been talking a little bit about a commodity arbitrage, which is just a where traders are going to be trading the price difference between these countries, and it's significant because if they're not doing it, they should be, and that would probably open up some more upside to canola as well. Soybean oil, with some support here. You can see that we've got some support here, but um, uh, still trading below the 50-day moving average as well. If we dive in a little bit deeper, it is trading above the 23.6, trading right at the 38.2 retracement. If we can hold that and maybe get it higher, get back into higher levels, that would support the canola as well. Soybeans themselves actually has a pretty nice upward curve, but it's still shy of your 50-day moving average as well. If we dig in a little bit deeper on this soybean, well, I already talked about that one. So here's wheat. Wheat actually has a fairly steep curve of going up here from its lows that it made last week. And if we can stay on this trajectory of that blue line, that would be very helpful for the wheat growers. We dig in a little bit deeper. We're just at a 23.6 retracement value from highs that we've made back in the spring. So we've got a little ways to go. These 38.6, 23.6. This is not a retracement value, but 61 and 78.6 are all very significant values to get to and get above those retracement values to get support. Hard red winter wheat is a steep upside here as well. So all wheats are kind of supporting each other. Even the European rapeseed wheat is kind of given some support for our red spring wheat that we're growing in Western Canada too. So reports for next week, we're going to have USDA, and we will have a principal crops for StatsCan, and then another estimate for the with the NVDI in August, which I'm going to say is probably the least significant of three reports that we're going to have next week.